Okay, good morning, everybody. It is October 4th. It's a weekly review where we take a look at what happened, and actually, we did get a lot happening last week. In particular, we saw the markets bought each of the last 3 days of the week on bad news. As you can see here, from the price points, right? The Russell was the only one that ended up negative. We actually had a 1% gain elsewhere, mostly cutting the losses for the year. Not significantly, but to some extent. If we look at, quick review, what happened, the short-term bottom, in my opinion, looks like it's in place. And you can see it in many of the subsectors, and you see it in the NDX. So let's pop to the NDX first and take a look at it. And what I'm looking at here is, the early indications that you look for to tell you that a turn is taking place. In particular, in this case, we have this swing point low, right? That's a bearish retest, regenerate. You got under it here, you stayed under the bar, now you're back over it. If you get one more bar up here, which would be tomorrow, that would give us a pretty good indication that this particular index, and the first index and the strongest index, is in fact trying to show us that a turn is at hand. So NDX leading the way, but it's not just the NDX. If it was just the NDX, I'd probably be a little bit more concerned about it. But I'm going to pop you into the bottom of this down here where I look at the short-term health. There is a lot of sectors that are showing short-term health, and I want to take a few minutes to try to show you, my thinking here and how I'm trying to use this to benefit you and, of course, to call the market. So let's take a look at some of these, and I'll pull my toolbar over here in front of you so that you can see it. If I go in here and I select, the trends, I think I call them major subsectors. And in here, there's a whole list of subsectors, and you can expand this and look at all the details of what they are. But essentially, these are all the subsectors. They're not all traded wildly. There's not a lot of volume in a lot of these, but a lot of them the iShares, and they give you a pretty good indication of what's happening across a lot of sectors. So each week and during the week, I try to keep an eye on this to see what is happening in the market. And so if I look at it now, what I want to show you in particular is some of the action that's taking place underneath the covers, so to speak. I've got gold up, for example, the gold miners. You had all these swing point lows. You're down here testing them all, and you can't break them, right? If you can't break something on the downside, you're going to flip around and try to go the other way. You can see some volume spurts. Now, I'm sure this is short covering, and that is what you're going to see in a lot of places, is you're going to see short covering take place when you get this kind of a bottom trying to, create a move back to the top side. You got a swing point high here. A break over that's going to test this swing point high, and then you can get a rather large move, to the top side. Now, if we shift this over and we look at it on a weekly, right, you can see what's happening here is that you've got a range that's down under what was the prior range. And so, here's your swing point lows, which would be the bearish retest regenerates on the way back up. That's where that swing point high was that we were just looking at. And you have this range that's up underneath the one above it, right? This one actually would carry the ranges about there. So if this comes back up, it would be the second test of the bearish retest and would have a better chance of getting higher. But even if it doesn't get higher, right? Even if it only makes it back to here, you're looking at a price point here of what is that, 16 roughly. You're sitting at 14.49, so $1.50 on what, a 14. So you're talking about a 10% move just to do the test. And so when I'm highlighting over here, when I'm highlighting these sectors, right, as quote unquote short-term health being bullish, stronger. That's what I'm talking about. And that's what the market is doing as a whole, right? It's setting up a bounce inside a larger range to the top side. And so if I go back over now and pull up the general market and take a look at it, that's exactly what's happening, probably happening over here as well. So if I come back and I put up the the prior range, which was up here, and then we look at this breakdown, right, into this area, and then the follow through, well, if I can get it drawn in right down into here, we've got a bounce taking place that's taking us back up to the higher zone. And that higher zone, and actually if I draw these in a little bit more correctly, that higher zone is going to give us the potential, right in there is where it was. And then we draw this one down a little bit farther, and then actually bring this down a little bit, and then bring that one down because it was actually over a little bit farther over. You can't see it anymore. It was a little bit lower. Then they're kind of equidistant. You can see it poking over the top, right? This area here was resistance. It's coming into the significant resistance right here, and then going to try to get to the high again. And of course the bearish retest regen. And if we pull that and look at it on the weekly, right, you can see here even more clearly, right? You can see those ranges that were in effect, the breakdowns that took place, right, to take us lower, and then the one that never quite got us down here to the lows, these lows over here. So, if you put it in like that, it's something like that, you're coming back up. Now, where can this eventually test to? Well, eventually the bearish retest regen would be back up here, right? You have the immediate ones that are here that overlap on this particular bar with the lows from before. That bounce could take you a long way up. Percentage-wise, it could be significant, right? We're sitting at 1951. If you made it all the way back up into this area, which is about 45, you're talking about 100 points, it's 5%. That's on the major indexes. If you look at the subsectors, like we were just looking at with gold stocks, we could look at it with oil stocks, we could look at it with a bunch of those that are here, right? These guys can move 10-15% on the subsectors if this bounce really does have some legs. And so when I'm talking about in the short-term health and talking about these sectors, and we're talking about the general market up here, that's what I'm talking about. We didn't know if we were going to get a bottom in on a short-term time frame. We didn't know if we were going to break down farther, right, on the S&P. We didn't know if it was going to break these lows or not, and it didn't. Buyers come in, they buy bad news 3 days in a row. They reverse this late day strength. Folks, people are trying to get ahead of what they need for the whole year, and that's a big gain. And they're putting all their money in there. They're playing with other people's money like they always do, and they're trying to set up a fourth quarter rally for themselves that will get them positive for the year. If there's one thing you can't do as a money manager is you can't underperform. So you got to throw all your money in there. And if the market goes down, oh well, I just did as bad as the market. If it goes up, I have to do as well as it. That's why when people play with other people's money, you see those kinds of moves and you see that kind of action. So this large range is reasonably well defined now. And then if we look at the European markets, which our markets are totally tied to, we're tied to them at the hip right now. This test, 93.25, gets under this low. So you had the test in the DAX of the lows from August. Under, back over, holds, test again on Friday on our weakness, holds. This looks like it's going to try to push back up and at least do a bearish retest regenerate off of this low. So in this area right here, right, if we pull this up and look at it on a weekly, you can see the undercut, less volume, hammer reversal. If you look at it on this view, right, this thing could bounce a good ways. You got a swing point low up here. That would be the bearish retest regen on the way back up. So you can see just how far, if I can get it drawn in right, you can see just how far this thing can move right to the upside. So there's the little area, and draw it in correctly back into this area. So world markets look like they're tired of going down. Our market also looks like it's putting in some sort of a move to the upside as well. And so all of this tells me that more than likely we probably have a bottom in place for now. The economic data still sucks. I mean, there's nothing to say about it. The Fed officials keep talking about rate hikes despite that. And earnings are going to be the next catalyst, which we've talked about. Although we could have a surprise catalyst in that we have the geopolitical situations around the world, in particular in Syria with Russia right now. Technically, right, the NDX overcomes that bearish retest regen. It gets over it. If we stay over at another bar, which would be tomorrow, I do think it probably signals that the bottom of the range is held and that we're probably going to get a large bounce inside that lower range, and that's probably very possible at this point. You sometimes look at it and you say, hey, is there nowhere to go but up? In other words, the markets have sold off significantly already. Just go back to the DAX, for example. This thing has come down a huge percentage already. If we look at it on the monthly or the weekly, you can see it. I mean, just take the last swing point high, 11.8, right? We made a low of 9.3. So you're down, 2,500 points. That's not a small move. It's a big move. Markets, even if they want to go down, they take time usually, right? Yeah, you get the big spurt down, then you get the bounce. And that is how these tops get formed if in fact this is a top. And I've talked about that enough to where I'm sure you're keyed in on it already. But if I come back over and we look at the S&P and we look at it on, say, a monthly time frame, right? This could be a major top, or it could be something like we've seen before, like back in 2011, right, where you sell off deep and then you eventually just take off again. We don't know which one it is. It's not clear yet. And when you look at it on this time frame, I mean, we're on a monthly, we don't even have the signal yet that it is over. We still have the potential here for this thing, to be simply doing inside days and it's going to go lower. I mean, that is not clear when you're looking at it on that time frame. Those are the long-term time frames, and what you really want to do though is focus on the shorter ones like the intermediate and say, what is happening? Well, there's a big range. This thing can trade all the way back to do these tests up at the 2045, and if it does that, you're going to see a lot of sectors and a lot of stocks move higher. What's the negatives? To me, it's that article that I wrote, and if you haven't read it, you might want to. It's on the front page. It's a death by 1,000 cuts scenario, and that is that we could just have the situation here. If we come back into this, we could have a situation where we just trade back up to that 2045, 2060 area potentially, and do a retest, regenerate back down again. So in other words, if I pull it over here, this could be nothing more than a large, top forming, or in the process of forming, where it's some sort of a rounded top, right, where you get the distribution that takes place up here. You have kind of the weakness that was preceding it, and you get the bounce back into this area. And so you can come all the way back up to here and be nothing more than a bounce. And everybody gets sucked back in. We're going back to new highs. And then that ends up being the major top. In other words, this all of a sudden takes on some sort of a form that looks like this, which eventually, takes you back under these lows and breaks you down on the long-term time frame. That could be the scenario. But in between here and there, we could get a significant bounce that looks like another bull market, or it looks like a continuation of the bull market. So large bounce, given the size of the range, is quite possible. Fundamentally, earnings, they're expected to be horrible. We may see them just run this up into the earnings, then sell the news. If we get a B point in between, so if I come back to the S&P, for example, on a short-term time frame, I could envision, and I talk about this a little bit later, I can envision some sort of a ABCD structure, right, where you come back into this area that takes it back up to test these highs. And so some sort of an ABCD structure, maybe a smaller pullback, maybe it comes just to here that takes you back up to test and test into that. So I could envision something like that taking place off these earnings, either into them or potentially a pullback and then a run as a result of them. Fed, like it or not, looks like it's stuck at ZIRP, and the market seems to like that. The other piece I just talked about a second ago is the fund managers really need a good fourth quarter. They're in the hole. They're negative for the year. They're going to pour whatever extra cash they have into it. And I believe, in fact, that is what we were seeing here already starting to take place on these markets. Fundamentally, geopolitical issues, I think that's probably the biggest exogenous event, especially in Syria, where Russia's got, boots on the ground now. We might see some fallout as a result of that, but so far the market has taken it in stride. It's not as if we don't know economically things are slowing down. I think that's another thing the market's struggling with, but again, so far it's taking it in stride. And the other thing that's happening is the bond risk, right? We've seen a collapse in the junk bonds. And you can look at it in different ways, but if we just look at this swing point low, we collapse up underneath that, right? And we just broke another one that's off the chart over here somewhere. And this chart looks like a mess. So why are people escaping this sector? Well, they think the market itself is in trouble. And so when I see something like this, it's a clear reminder that the trend is not up for the market, right? The trend is down on the short and intermediate term time frame. So whatever move goes back the other way is a counter trend bounce. There's enough danger out there for us to be cognizant of the fact that it's a counter trend bounce until proven otherwise. And so you have to view this move up in that perspective. What do I think we should be watching for? Well, last week we were looking to see if that range held. It did. We were also looking to see if the Fed kept talking about higher rates and putting pressure on the market. It did, yet the market started to get bought at the end of the week despite that, and also got bought in the face of bad economic data. Both Thursday and Friday on the employment number, they kept buying. So that tells me short term, this market wants to try and trade higher. And we were also looking at the Fed, and I already talked about that. So what are we going to look at this week? I suspect, the key thing this week is, do we see other indexes now join the NDX on the upside? And so what would be the candidate? Well, of course, the NASDAQ composite itself would be the first. For it's the strongest one comparatively, right? You got a swing point low here. Now the wide price spread bar makes it a little bit harder, but you got to get above this. It's got a good push up towards it. Looks like it's going to head up there and try to do it. And then, but behind that, I would think that you could look at the S&P 500 and then the Russell, right? S&P has that same sort of a bar, and then the Russell, you've got a different bar, but you've got the same sort of direction taking place there. Reversal. The Russell was the only one that undercut. Now it's back up inside that bar. It's going to try to get to the top. 1132 on the number there. I think the other thing that we need to watch is the ABCD structures and see if they can actually take place. So again, if we just use the Russell that we had up here, are we going to see some sort of little small push up to resistance, get a pullback, right, and then set up a bullish ABCD structure? And then lastly, I think, Europe, would it work higher? It really should at this point. If Europe works higher, that's going to be a positive. Economically, you got, more and more evidence last week of a slowdown. You got more Fed speak this week. You got some PMIs printing weaker here. All of this, to me, has been negatives. You got more PMIs. It's going to be services index and the ISM number on Monday actually. Fed minutes on Thursday. Earnings season begins. Those are the fundamentals to be watching. What's the bottom line here? Although the bearish bias was still warranted, right? We still think that way, right? And we should. I think that we have to focus on this range trade now, setting up for a larger thrust to the upside. And even though it's going to be a sideways trading market, in other words, a counter trend move making it sideways, it's a larger move, and we could get a larger move to the upside, and that's what I'd be focused on. Portfolio-wise, there's still not much in it, but it's time to expand it. And so you can review here what happened. Zeltiq was the only thing we bought into last week. SBUX we haven't been able to. We took some profits on DGZ. We're probably going to look on that bounce in gold we just talked about at the top of the show. We're going to look to put some more DGZ out and do that same thing. But there are many, many sectors here to focus on. The ones that I think that can move the most are the ones that have been beaten up the most. All these resource stocks, right? You can go right down the list here. These are the ones that have the biggest gain potential. Of course, they have more risk with them, but they could move the most. Technology, cloud computing, the social, those in particular look pretty good. Financials okay. That's a little bit more iffy in my mind. Maybe the insurance one. Real estate, for whatever reason, real estate looks pretty interesting. I assume the move is a function of interest rates and the fact that they're not going to go up. But this has had a nice pullback, right? It's got a nice ABCD structure here to take it back to the top. And that's true of all three of those real estate well, not numbers, but the real estate things that I've shown. If I look, real estate things, the sectors, the three sectors. Sorry, I'm struggling for words there. If we look at the rest of the list here, water resources look pretty interesting. I like the setup on those as well. And again, all of these are short-term counter trend trades, right? To pull you back up. So you got a nice big spike off that low, that test. Here was the test of this low. Big move back up. And you look at it on a weekly, they can go quite a ways before they get back to resistance. So counter trend trades back to the retest regens on the weeklies is what I would be thinking. Okay, so tomorrow, let me actually talk about it a little bit different. If you have not taking anything off and you have large positions already, right, which we don't, or at least I don't, you don't really want to go loading up on stuff now because you already have enough, right? And you're going to be waiting for the counter trend bounce as a way to get rid of some stuff. Now maybe you put on a little bit more risk, but you certainly don't load up. If you don't have much, which is the case here in the portfolio, then you can do two things, right? You can go, and I'll just pull up a chart again. I'll go back to, let's just use the water resources. You can go here, and let me pull this to a weekly. You can go here and say, okay, the target should be up here somewhere, right? Buy some here, and then look to buy more if it pulls back and looks to hold, or it pulls up, does an ABCD structure, and then buy some more again. So the ideal is you just take and use the fact that you're lightly invested already, right, to just throw some exposure on immediately, and then look for the pullback to buy some more. And so what you're going to see is you're going to see me pick sectors to do this in tomorrow morning, most likely. Unless we get a down morning that we can buy in, we'll just have to buy a little bit higher. I don't want this market to run away from me, which typically happens once it gets going like this. And so you just have to put some exposure on with the idea of putting a little bit more on later. If we're wrong, and if it really is a small bounce before we go lower, that's the risk you take. You have to take the risk when the opportunity is available, and you have the potential, both a high probability that it succeeds and good potential, and I think that's where we're at right now. So that's it for this week. Thanks as always. If I can help, just let me know. I do my best to help each and every one of you. So I'm here. I'm a resource. Take care.